Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius and Anucauskas. Today's the 21st of October 2019. So, welcome everyone. Welcome to this Monday's morning session where we're gonna have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So. The content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Also, just before we jump into the charts, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website, but specifically our JFD Research tab here, research page, which you can also check out on a daily basis. And I believe you can find a lot of useful stuff here for yourselves, guys. So, yep, feel free to visit us here on jfdbank.com and click on the research tab right here on the top. But for now, let's jump into the charts. Now, the first one I want to touch on here is the FTSE100. Now, I talked about this one last week, in the end of the week, and basically what I was telling you guys to keep a close eye on some of these potential breakout points. So for now, we're not doing anything with it. We're just going to continue observing it because, in a way, it continues to move kind of sideways still. So from kind of around the beginning of October, when the index kind of reversed to the upside a little bit here, it started moving sideways and is now currently stuck roughly between the 7,140 zone and the 7,250-52 area. So we're going to keep a close eye on these levels. These are going to be our breakout points for in order to kind of consider a further directional move. So in a way, you can see that the index is currently, or should I say, last week it closed closer to the lower side here towards the near the 7,140. But looking at the cash index, we're seeing a bit of a rebound here, back up here. That said, it's still below the 7,200 zone. So in a way, we're still keeping an eye on it. We're not going to predict this one because again, we still we do have the continuation of the Brexit saga. So and we need to see how this is going to evolve with that, because for now you can see that the index could be waiting for a clear kind of clear trigger point, let's put it that way, so that it would be able to move on certain news. But for now it's just walking around here. So for now what we're going to do is just keep an eye on these two levels. In terms of the upside, just a one kind of remark here is that if we get a push above the 7,250-52 zone, yes, that kind of is opening the path towards slightly higher levels. But just for that extra confirmation, a push above the 200 EMA here could in a way just do the trick for more buyers, and we could then target areas like the 7,440 or even above that. So keep your eyes on that, on this one. Gold. Gold, it continues to trade within this nice falling channel formation. So we're still kind of moving sideways here, roughly as well, inside this formation between the 1475 zone and the 1500 level. So for now, we're just going to remain neutral, probably, because, or should I say, neutral to more cautiously bearish, because in order for us to aim for lower levels, we need to see a drop below the 1475 zone first, and only then we will aim for lower levels. For now, you can see that the commodity is closer to the psychological 1500 level, but at the same time it's still below the upper bound of the falling channel formation. So in terms of the upside, well, we need to see not only a break of this upper bound of the channel, but also ideally a push above the 1520 zone, because this way the commodity would push above its October high, the current October high, which is, like I said, around the 1520, and that was reached on the October 3rd. And this way, the precious metal would confirm a forthcoming higher high, and we could target these previous highs, or should I say, the current highest point of this year near the 1557 zone. So, but again, for now, we cannot really talk about the upside until we get our break out of this falling channel formation. In terms of, like I said, the downside, we're still keeping an eye on this 1475. So keep your eyes on this one. AUD USD. I talked about this one on Friday, and basically what I was talking about here is to keep an eye on a potential correction. So we did have a move higher, and this is what I was saying, that we did have we continued moving higher a little bit, but didn't quite reach this 0.68 6970 zone, but quickly then retraced back down. You saw this sharp fall, sharp slide towards the 0.6840 zone, approximately around there, from which the pair kind of rebounded and now it's pushing back to the upside. So for now, this is kind of working out nicely. Again, we're keeping a close eye on this 0.6869 zone. If it holds, we could see something like this happening again, where we could see a bit of correction. The reason why I'm talking about a correction, because we had already a nice steep move higher here. You can see after kind of finding support near the 0.6720 zone, the pair kind of reversed sharply to the upside. So in a way, on the shorter time frame, we are quite overbought. So that's why we are kind of hoping maybe to see a bit of correction here before another leg of buying. So in a way, this level here presents us a good opportunity to kind of consider this idea. So in a way, if we see a push higher here towards this 0.6869, around there, we do have today's R1. So basically, all this kind of could add up for a good resistance, and we could see this one correcting back down a little bit. So if it, of course, starts falling below the 0.6840 or 38 zone here, then well, we will consider, and especially if it, especially if it falls below the 21 EMA, then we will consider a possible move lower here. But again, this move lower could be seen as part of a correction, because now previously I've drawn this upside support line taken from the low of the 2nd of October. So like I said, now we can adjust this one a little bit like this, because this presented a very nice area of support here, and this basically, it's a bit of a tentative line. So this area here will be considered as a second point of this upside line that we've got here, drawn from the low of the 2nd of October. So, and this is what I was saying, that if we see a drop lower here, this could be seen as part of a correction, a larger correction, and the downside could be limited due to this upside support line. So for now, we'll keep this in mind. Again, I'll repeat myself. This upside line is a bit of a tentative right now, so don't focus on it too much. But we'll still keep an eye on it, just in case this actually the rate does respect this line again and rebounds from it, in case this travels to the downside. But for now, like I said, we could see a bit of a move higher. But if it struggles to push above the 0.6870 zone, then we may see a bit of a correction back down. And then after that, of course, if it struggles to drop below the 0.683940 zone here, then we could see another round of buying here, and we could target the current the high, or should I say, in general, the highest point of September near the 0.6895 zone. So we'll keep an eye on that one. USD CHF. Now this has worked out nicely. So I've looked at this one this week, and basically on Thursday, this is our JFD trading view page, and we've thrown out this idea before it kind of started breaking its key area of support. So, or should I say, actually started breaking its key area of support, but it was still kind of balancing around it. So basically this worked out nicely. So we managed to hit our target, and now we can actually get rid of this for now. Looking at this picture, there is still potential for this one to move further down. We did have an overshoot and drop below this 0.9848 zone. For now, if we do do get another slide here, then yep, we will consider lower areas again, like the 0.9794, which actually acted as a fantastic area of support here back on 29th of August and also on the 4th of September. But again, like I said, for now, we'll keep it short and simple. Again, this level here, the 0.9848, in a way we can actually drop it a little bit lower because you can see that we did have an overshoot, and basically this level here could be something to watch out for. So that's a little bit lower, but 0.984140 zone could in a way do the trick here for more sellers. If we see a slide below it, then like I said, we will aim for this 0.9795 and then we'll take it from there. In terms of the upside, this one again, it's probably this level here needs to be adjusted now because we did have a nice break below it, and we kind of then it traveled higher. This after breaking this lower, it retraced back to the upside, but failed to touch this area, and now it created this little barrier near the 0.9891, 92 area, approximately around there. So we're going to keep an eye on this one. If we get a push above it, this way the rate could also climb above its 21 EMA here on the 4-hour chart, shown as the yellow line, and this way more buyers could be joining in here and potentially trying to lift this pair higher. That said, the upside eventually could be limited due to this downside resistance line, guys. To keep an eye on it. It's a bit of a tentative for now, but if it respects it again, then we may see another round of selling. So for now, that's the kind of short-term game plan here for us. In terms of, like I said, the downside, this is what we are going to be keeping a close eye on. Let me just quickly put this highlighted area here, and that's the a drop below the 0.9840 zone could in a way open the path towards slightly lower areas. And in terms of the upside, the 0.9891, 92 zone could in a way open the path towards the towards this downside resistance line for a quick test. So keep your eyes on this one. GBPCAD. So of course, as you know, over the weekend we did have the Parliament vote, UK Parliament vote, and of course it continues. The saga continues. So now they've requested for Boris Johnson to ask the European Union for a delay, for an extension again. So we'll see how this is going to evolve. For now, no economic data is really kind of that impacting that much the pound as all the Brexit headlines. So basically, for now, what you can only do here is keep an eye on the headlines. So of course we will be looking at some of these key support and resistance levels, but again at the same time we will be very cautious because, like I said, the whole Brexit saga is kind of affecting this right now. So looking at the technical picture here, you can see that after the pair managed to reach the area near these 1.1795 zone, it quickly retraced back down. It did have an attempt to push higher here on Friday, but failed to reach this level and kind of sold off a little bit as well. Look, if I'll zoom in here a little bit, and I'll try to show you what I'm talking about here very quickly. So in a way, what we've got ourselves here is a nice kind of upside support line in a way. But the same time, this upside support line, yes, we can keep an eye on it. Of course, you can see that, yes, we did have a break a little bit, but now the rate is trying to climb back above it. So in a way, we are now questioning how important this upside line is. So in a way, what you could also draw here yourselves is this this kind of an asymmetrical triangle formation here, roughly around here. It probably better visibility here on a 1-hour chart. And let me just quickly jump into this one, guys. So in a way, for now, you could keep an eye on this one. It's quite interesting to see if it's going to break it or not. So for now we're going to keep this idea in our heads, and you can see that the pair is currently kind of stuck here. And basically for today, keep your eyes on this potential formation. If we get a pop through the upper side, then yep, we will aim for the highs of last week near the 1.7095, and if that gets broken, then yep, we will consider higher levels, because this would confirm a forthcoming higher high. But if it starts dropping below the lower side of this triangle, then well, be very careful as well, because in a way this could also place the rate below its 21 EMA here on the 4-hour chart especially, and we could consider further declines here. And there are some good potential levels. We could aim for areas like, and let me just put this one on the chart very quickly. So for areas something around here, around the 1.6820 zone, previously acting as a good area of resistance and also support. So we will aim for that. It's currently around its S2, and for now, guys, given that the pair already had a fantastic run here to the upside over the past couple of days, or should I say the last week and the week before that, we could see a bit of correction here, and especially, like I said, especially if it drops below this lower side of the triangle here, and drops below the 21 EMA, and then, but we're not going to drag this one too much to the downside. It could in a way drop below our target here at 1.6820. It could in a way move a little bit lower, and if it finds support somewhere around here near these EMAs, we could see a nice rebound and a push back to the upside. So for now, that's the kind of, we're going to be very cautious. That's going to be our idea for today. Again, keep your eyes on the headlines, guys, and because this is heavily driven by Brexit headlines. Euro dollar, so it's correcting back down a little bit after finding good support near the 1.1183 last week, and we're hoping to see a bit of more correction here. The pair still remains above its short-term tentative, or I wouldn't actually call it a tentative anymore, but a short-term upside support line taken from the low of the 1st of October. Now, again, we could see a bit of a correction, a bit more correction, but if it, let's say, struggles to push below the 1.1110 zone, then we could see a nice round of buying again, potentially driving this one to the highs of last week or even above it. But if it starts dropping below the 1.1110, then we will consider further declines, but only up until this upside support line, because as long as it remains above this upside line, we will continue aiming to the upside, because for now the short-term trend is still to the upside, even though we are seeing a bit of correction. But again, if this upside line breaks, then yep, we will aim for even lower levels. But until then, we cannot really talk about the like, let's say, deeper declines here. The only declines that we can talk about here are a possible correction before another leg of buying. So that's why, guys, for now, keep your eyes on this one. Let's say this decides not to travel lower, decides not to correct lower. Keep your eyes on the 1.1183, because this is the high of last week, and if we get a nice push above it, then the next potential area of resistance for us will be around here near the highest point of August, and that's approximately around the 1.1250. So that's going to be our aim if we get a push above the 1.1183 zone. So keep your eyes on this one. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my trader's tea time, as always, that's 13:15 GMT. For now, I hope you have a very nice day. Be very careful, guys. We don't have much economic data coming out in general, so for now and today. But again, keep your eyes on the political developments, of course, the trade wars, and of course the Brexit saga. So, yep, keep your eyes on those, because those are the ones who are driving the market right now. So, thank you very much, guys. And I'll see you later in my Trader's Tea Time 13:15. We're GMT, where we're going to have a quick look at some of these instruments again and some other ones as well. So, bye-bye.